Okay, so if you read, any tech or finance headlines lately, you probably think we're deep into the cashless age. Physical banks vanishing, ATMs, basically dinosaurs headed for the scrap heap. But maybe hold that thought. Our sources for this deep dive, they're painting a really different picture, a much more complex one. We're talking about a global ATM industry that's not just hanging on, it's actually this evolving giant. I think 2.9 million machines out there. It's really redefining itself through tech, through structural changes. So today we're doing a deep dive into that whole transition. We're pulling from this really comprehensive AZ guide on global trends, and we're pairing that with some fascinating insights into what Gen Z, the supposedly all digital consumers actually want from their banks.
Exactly. And our mission here, it's kind of twofold. First, we really need to unpack these big structural shifts happening. Things like pooling ATM fleets, outsourcing, these new utility service models. They're totally changing the economics of having ATMs out there. And second, crucially, we've got to trace how technology, especially mobile integration, contactless stuff, is turning this physical machine into, well, a seamless digital touch point. It's really about figuring out how this, let's face it, legacy infrastructure fits into a future-focused banking world.
Right. Let's start with just the sheer scale, because I think that gets lost in all the noise about digital everything. We're talking 2.9 million ATMs globally, still nearly 1 million physical bank branches worldwide, too. That works out to something like, 360 machines for every million people on the planet. It's huge.
Yeah, and what's immediately fascinating when you dig into the numbers is the distribution. That's under G for geographical differences. See, the global total number of ATMs is actually shrinking slightly, but that headline figure, it hides these two completely different stories playing out. On one side, you've got Asia Pacific, big drop in ATM numbers there, but that's mostly driven by massive planned reductions in China. But then on the other side, you have real expansion, growth stories. That's under E for emerging markets, particularly the Middle East and Africa.
Okay, so these are the sort of counter trends, aren't they? The sources say the Middle East and Africa, that's the fastest growing ATM region. And wait, it's also the only region globally where bank branch numbers are actually increasing. That really goes against the grain.
It absolutely does. And the main driver here is overwhelmingly financial inclusion. In a lot of these countries, the ATM isn't seen as like replacing a branch. It's often the first bit of formal financial infrastructure they get. It's just critical for basic access where there wasn't much before.
So it's left out the digital transformation and more about just fundamental access, building that financial foundation.
Precisely. You see active network growth in places like Uzbekistan, Egypt. They're using ATMs to bring more people into the formal financial system. So the ATM there isn't some legacy burden. It's a foundational utility. It helps people participate in the economy. It really makes you realize, how much of that cashless society talk is just focused on mature urban markets. It completely misses this huge global effort to just build basic financial infrastructure.
Okay, interesting. So let's shift gears. How are the established banks, the financial institutions, handling this expensive, evolving infrastructure, especially in those mature markets? They seem to be radically rethinking how they own and operate these machines, moving away from, the old way of just buying and running them themselves. Our sources highlight 3 big alternative models shaping things. First up is A for ATM-as-a-Service, or ATNow. The key idea here seems to be treating the physical hardware less like a big capital investment and more like an operating expense, like the utility you subscribe to.
Right.
They outsource the whole management cycle, the cash, the security, the upkeep. And that frees up money to put into their digital channels.
Yeah, it's a fundamental shift in strategy, really, turning what used to be a mandatory heavy capital spend into a flexible service contract. It lets the banks keep that crucial customer touch point, the ATM, but without the massive headache of actually managing it day to day. The cash levels, security risks, maintenance, compliance.
All that stuff.
Exactly. And collaboration is speeding up, too, in a couple of main ways. First, there's P for pooling. That's where several banks agreed to basically merge their separate ATM networks. They run them all together under one single kind of bank-neutral brand. Belgium and the Netherlands, they were really pioneers with this model very successfully.
Okay, that sounds pretty similar to the third model mentioned, U for utility networks. What's the key difference there for a bank, operationally speaking? Pooling versus utility?
Good question. The crucial difference really comes down to ownership and risk. In pooling, the banks still technically own the ATMs. They just manage them collectively under that shared brand. With a utility network, it's different. The banks might scale back their own machines, maybe get rid of most of them entirely, but they sign up with a third-party company. That third party owns and operates a standardized fleet of ATMs and guarantees that the bank's customers can use them fee-free. So the banks basically hand off the entire hardware headache, the risk, everything, to a specialist provider.
Got it. So as a customer, I wouldn't care whose logo is on the machine anymore, just that my bank gives me fee-free access. That sounds like, well, maybe a threat to traditional bank branding at the machine, but maybe a huge win for just finding an ATM anywhere, especially when you factor in the ongoing trend of B for branch closures.
Precisely. Branches are closing faster and faster pretty much everywhere, and that makes the location of the remaining ATMs absolutely critical. The sources are really clear. Off-site ATMs, the ones not attached to a branch, are now a key way banks maintain that connection with customers in a world with fewer branches.
Wow.
And it's a big shift. Over half of all ATMs globally are now off-site, away from the old bank buildings.
And this move off-site, this geographical shift, it's directly linked to the rise of IADs, right? The Independent ATM Deployers. They seem to be the ones enabling these new utility models.
Absolutely. They're the disruptors here. Even while the overall network shrinks in Asia-Pacific, like we said, IADs are actually booming in big markets there. Think India, Indonesia. It proves they're often just more efficient at managing these off-site high-traffic spots.
Right.
And that growth, plus the fact that the tech in these machines is getting more complex all the time, well, it's pushing more and more deployers towards O for outsourcing, specifically outsourcing the support first and second line maintenance, because keeping these advanced systems running smoothly needs increasingly specialized skills.
Okay, but all these changes, the pooling, the outsourcing, moving off-site, ultimately they have to serve the customer, right? So let's look at maybe the biggest paradox we found in the sources. It's all about why for youth and digital natives.
Yeah.
Gen Z. I have to say, I was genuinely surprised by some of this data. We just assumed they live entirely online. Digital wallets, banking apps, but the sources, they paint a really different picture when it comes to what Gen Z actually prioritizes regarding physical banking stuff.
Oh, absolutely. I mean, don't get me wrong. They rely heavily on digital tools. The data says 64% use their mobile banking app most often. That's no surprise. But when they're actually choosing which bank to go with, physical convenience still matters a lot. Get this, 42% of Gen Z say ATM proximity is a critical factor in their choice. Compare that to only 29% who say branch proximity is critical. So they don't necessarily want the human teller, but they definitely want the machine nearby.
That difference is really striking. What does that actually tell us about how they view money or banking? Is it just raw convenience, or is there something deeper going on?
I think it tells us the ATM serves as this really crucial safety net. It has to be there for emergencies, right? When digital stuff fails, maybe there's an outage or you're just somewhere that only takes cash. The economy's digitalizing fast, yeah, but it's definitely not cashless yet. And they need that guaranteed fallback, that physical access point. And there's more to it. C for cash. It's still a surprisingly powerful tool for them, especially for financial discipline. The sources actually cite specific popular trends among Gen Z, like using cash stuffing. You know, putting physical cash into envelopes for different budget categories, or doing cash-only weekends as deliberate ways to control spending.
Wow, okay. That's fascinating. It's like they're using this really old-school analog approach to budgeting in a world full of automated savings apps and digital spreadsheets. But it makes a certain kind of sense, doesn't it? It's way harder to accidentally overspend when the cash is literally sitting in an envelope marked rent or groceries. It adds friction back into spending, makes it more deliberate.
Precisely. For a generation that, let's be honest, often reports high anxiety about money and personal finance, physical cash offers tangible control, a visual cue for where their money's going. So yeah, they use digital tools for tracking for transfers, sure, but they still lean on the physical ATM to actually enable these important sort of manual financial control habits. It's like the ATM is the bridge between their digital financial world and their physical budgeting tactics.
Okay, so the ATM isn't just a backup plan. It's an active tool. And that means the demands on its functionality must have just exploded. It's not just does it give out cash anymore. It's how it works. How secure is it? How efficient? We're seeing machines now that can handle much more sophisticated stuff like biometric ID or linking up with your mobile for verification. And the range of services is way broader too. Cash deposits, which need much smarter machines that can check and sort bills, those are now available at more than half of all ATMs globally. That's huge.
And For Gen Z especially, that digital integration piece, it's totally non-negotiable. They really seem to view the ATM not as some separate channel, but literally as an extension of their mobile banking app. If the look and feel isn't seamless, if the screen on the ATM doesn't kind of match the app they use every day,
Right.
it just feels clunky. It fails the experience test for them.
Right.
They expect specific things. Contactless transactions, obviously, that's table stakes now. But the real key is that true mobile app integration. They want to be able to start a withdrawal on their phone, pick the account before they even get to the machine, then just walk up, tap their phone or scan something and grab the cash in seconds. Seamless.
And the tech making that smooth handover possible. I saw mention of QR codes. That's interesting.
Yeah, exactly. It's still a pretty small proportion of machines using them globally, but it's growing. It allows for completely cardless transactions. You can either scan a QR code on the ATM screen using your phone's banking app, or the other way around, use the ATM scanner to read a QR code generated in your app. Either way, no card needed. Speeds things up, potentially improves security too.
Makes sense.
Now, backing all this up, enabling deployers to actually afford these features is efficiency on the back end. And that's where R for recycling comes in. It's vital. Most ATMs that take deposits globally are now recycling capable. That just means the cash someone deposits can be checked, validated, and then dispensed to the next customer needing a withdrawal. That's a total game changer for the companies running the ATMs. It lets them drastically cut down on how often they need armored trucks, cash in transit to visit the machine. Makes the whole operation way leaner, cheaper.
And that operational efficiency, it must lean pretty heavily on the tech inside the machine, the software running it all.
Oh, absolutely. Deployers are investing quite a bit in specialized software, particularly things like dedicated CRM customer relationship management solutions for ATMs. Believe it or not, a lot of ATMs out there are still running without a proper system to track customer interactions at that specific touch point. That's just a massive missed opportunity, right? For gathering data, for offering personalized services or messages right there at the machine.
Yeah, definitely. And sort of underpinning all these software upgrades is that huge Windows migration effort, isn't it?
Yes, that's a big one operationally. Operators are scrambling basically to move everything to Windows 10 and get ready for Windows 11. It's not just about, avoiding using old software. It's critical for security and for making sure they can still get support from vendors for these really complex financial terminals. You can't run these things on outdated, unsupported OSs. Okay, maybe let's quickly touch on the global vendor landscape. Who's actually making these machines? It's a pretty stable market overall, but highly consolidated, which means the big players who are left are fighting really hard for market share, especially for these big modernization contracts. Vado the Tapper for Diebold Nixdorf. They currently have the largest slice of the pie globally. They seem particularly strong in those higher growth regions we mentioned, Latin America, the Caribbean, Central, and Eastern Europe.
Okay, and right behind them is N for NCR Atleos. What's interesting about them, the sources note, is their dominance in two very different but really important markets. They lead in Western Europe, where that pooling model is big. But they also lead in the Middle East and Africa, where it's all about network expansion. So they've somehow figured out how to win in both shrinking and growing markets. That's pretty clever.
It is strategic, yeah. And rounding out the top three is Hyosung TNS, the Korean manufacturer. Their big stronghold is North America. And that dominance seems to come largely from really successfully catering to that huge market of independent ATM deployers, the IADs in the US that we talked about. They found their niche basically serving that high volume, often off-site, more decentralized part of the market. And then you look over at Asia Pacific again, it really stands out as having the most varied mix of suppliers, lots of domestic players there. But even there, things are changing. You've got Japanese leaders like Hitachi and OKI who seem stable. But the news that Fujitsu is planning to get out of ATM manufacturing entirely by the end of the decade, that's significant. It shows even established giants are weighing the costs versus the strategic value of making the hardware itself in this kind of evolving market.
Right. And just to reinforce a point, despite all the talk of shrinkage globally, the sources do point to specific expansion efforts, marked with an X. Even happening within mature markets like the US, some banking groups are actually adding physical branches and APMs that suggest that physical accessibility, that footprint, can still be a competitive advantage, even in traditionally banked economies. Hashtag tag outro. So wrapping this all up, what's the big picture for the future of finance here? I think the core takeaway from this deep dive is that the ATM is going through this really profound shift. It's moving away from being just a necessary, passive kind of back office cost. And it's becoming this critical brand experience platform, something that reinforces trust, delivers convenience, especially for those digital natives like Gen Z, who surprisingly still rely on that physical safety net and sometimes that budgeting tool.
Yeah, I agree. And for the banks, the financial institutions listening, the application seems really clear. You absolutely have to stop thinking of the ATM as this standalone legacy thing over in the corner. It needs to be positioned as a totally integral, seamless part of your whole digital ecosystem. The investment priority has got to be those modern features we discussed, the cardless options, contactless, that really smooth app to ATM handover. The machine itself needs to feel like just another screen in the customer's mobile banking journey. Natural, logical.
Yeah. We started off talking about the shrinking global network, but that AZ guide leaves us with one last pretty powerful, provocative thought. It's under Z for zero ATM zones. Despite the expansion we see in some emerging economies, despite the strategic growth in offsite locations, the reality is significant coverage gaps still exist, particularly in rural areas, remote communities, places often underserved by traditional banking infrastructure. So as the global network does shrink overall, it raises this really crucial question for you, the listener, to think about. How will these areas, these near-zero ATM zones, actually achieve real financial inclusion? Could these new models we talked about, the utility networks, the IADs, the ones that decouple owning the machine from providing the service, could they be the key? Could they be the ones to finally bridge that access gap, serving the people left behind as bank branches continue to vanish? That feels like the real challenge and maybe opportunity for the next decade.